Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is financing the future, funding electric vehicles and next gen equipment. Transitioning your fleet or operations to electric and advanced machinery improves efficiency, cuts emissions, and strengthens your brand, but upfront costs are higher. Here's how to structure funding for tomorrow's technology. First, quantify your upgrade case. Calculate current fuel, maintenance, and emissions compliance expenses for existing assets. If a diesel truck costs $30,000 per year in fuel and service and its electric equivalent reduces that by 60%, you free up $18,000 annually. Use these savings projections to build a clear ROI model that lenders and investors will respect. Next, identify available incentives. Federal programs like the IZEV commercial vehicle rebate provide up to $50,000 per truck, while provincial grants in BC, Quebec, and Ontario can cover 15 to 30% of purchase or retrofit costs. Compile each program's eligibility criteria, maximum amounts, and application deadlines to align financing and purchasing timelines. Now, explore financing tools. 1. Green equipment loans. Specialty lenders and banks offer loans covering 80 to 100% of electric vehicle EV or low emission equipment costs over 5 to 7 years, often at rates 0.5 to 1% below standard loans when paired with rebates. Strengthen your application with 3 years of financials, maintenance records, and your projected savings schedule. Demonstrated cost reductions help secure better spreads. 2. Operating leases. Lease EVs, battery systems, or next-gen machines for 36-60 months. Lease payments are predictable and often include maintenance and battery replacement provisions. Because the lessor bears residual value risk, you benefit from technology upgrades without resale hassles. At term end, swap into newer models to stay on the cutting edge. 3. Finance leases. Functioning like installment loans, finance leases let you own equipment at term end for a nominal fee while enjoying full tax depreciation benefits. Total cost of capital is slightly higher than loans but often includes service bundles that reduce operational risk. 4. Sale leasebacks. Monetize existing late model assets by selling them to a finance company and leasing them back. Use the proceeds to fund EV purchases or next-gen upgrades without interrupting operations. Detailed maintenance logs maximize resale value and improve lease terms. 5. Receivables-based lines of credit. Secure a revolving line of credit against outstanding invoices or owned assets. Lenders may advance up to 80% of eligible receivables, giving on-demand cash for deposits or down payments. Interest accrues only on drawn balances, and you repay as rebates or savings materialize. 6. Vendor financing. OEMs such as Volvo, Mack, and electric equipment manufacturers often back promotional programs, 0% financing for 12-24 months or deferred payments. Analyze the total cost over the full term, including post-promo rate resets, to ensure alignment with cash flow forecasts. Timing and coordination. Structure financing so disbursements follow rebate approvals and precede equipment delivery. Work with your advisor to sync grant applications, purchase orders, and funding draws into a seamless schedule that avoids tying up working capital. Cost-benefit analysis. Run side-by-side comparisons of loans, leases, sale leasebacks, and vendor programs. Include rebates, tax depreciation benefits, maintenance savings, residual value projections, and any cap and floor or swap costs. Model cash flow under scenarios such as energy price spikes or battery technology shifts, and stress test for resilience. 3 action steps. 1. Audit expenses. Document each asset's fuel, maintenance, and emissions compliance costs. 2. Map incentives. List federal and provincial programs with amounts, criteria, and deadlines. 3. Solicit offers. Gather proposals for green loans, operating and finance leases, sale leasebacks, receivables lines, and vendor deals. Work with a finance broker experienced in eco projects to stack every available rebate and minimize net cost. Transitioning to electric vehicles and next-gen equipment isn't just green, It's smart business. With targeted financing, you can modernize your operations, reduce operating expenses, and meet sustainability goals without jeopardizing liquidity. I'm Haider Malik. Thanks for listening.